I'm James, one of the content team leaders here at A1 Trading, and as we start today's stream, I wanted to let you know about one of our show's main sponsors, FX2 Funding. With all the craziness going on in the prop firm space, we're excited to share some of the solutions FX2 Funding has put together for their traders. First, FX2 is rolling out DXTrade, which is a web-based trading platform that provides traders a smooth trading experience. It also looks super cool too. So for traders looking to get funded, you can get 15% off by using promo code A1Trading15. That's A1Trading15. The link and promo code can also be found in the description. Now, onto the show.
All right. Good morning, guys. Welcome back to another live stream. Thank you for being here. Thanks for being here on what is a really big day. We've got, of course, the consumer price index coming out today, which is probably, I would argue, probably the biggest data point that we're going to get this month. Close second was, of course, NFP, the jobs numbers that came out Friday. And of course, jobs came out and they actually disappointed. So today we have a really important kind of figure. Made more important, by the way, by this jobs disappointment, okay? Because guess what, guys? If you're somebody who trades gold, if you're somebody who trades indices, if you trade currency pairs, this news matters so much. And, before I get off on a rant on how important fundamentals are, even if you don't trade fundamentals, you still kind of bow down to them when you realize that you can't just trade news candles because of how important the news figure actually is. That's why the market moves in the first place, right? So for the people out there who say fundamentals don't matter, they do. That's why we're all here, and that's why we all care. It's because the CPI number today really matters to financial markets and to what the Fed is going to do next. So we're going to cover it all. We're going to cover the indices. We're going to cover gold. We're going to cover currencies. And I should mention that. So let me finish my thought here. So jobs numbers, they were weak, right? So jobs numbers came out. They revised last month's number down. The number here today, or this month for February, was a beat, but they revised last month's numbers down so much that they basically offset and more. So basically, we had slow jobs, right? Point made. Slow down in jobs. But then we have CPI, we have the inflation rate. This is a big one because now that jobs have cooled, the question is, are we going to get inflation to cool too? Now, if inflation cools too, I think we might see a scenario in which case, hey, okay, stocks can do okay in that because now jobs are cooling, but yeah, the inflation number's back on track. Cool. Where things get really interesting here today, guys, I will say this would be probably cause an uproar in financial markets, would be if inflation does not come down, because then suddenly you have a mix of two really ugly stories. You have jobs data coming down, cooling, and you have inflation staying problematic. If that happens today, guys, get ready. This stream is about to be wild if that is in fact what we see. However, let me just say again, this is right now the expectations are for inflation to come in and cool overall and kind of in line with the overall story. In fact, let's pull up a couple things here. We're going to look at some data today. We're going to look at some charts. We're going to look at some technicals. We're going to look at some fundamentals. It's a big stream. Hope you have your coffee ready or whatever you're drinking. Probably not alcohol. I'd argue against that when you've got trading charts in front of you. But coffee's good. Stay caffeinated, whatever it is. So today we are expecting, and we're just 6 minutes away, guys. We are expecting for CPI over year to come out at 3.1%, staying the same as last month, which would actually be kind of in line with the overall target of seeing cooling inflation. So let me say this. If you get today some hot prints, what is a hot print? It's anything over 3.1. If you get a hot print today, markets are going to kind of be a little creeped out, right? Stock market probably comes down. You probably see the gold market rally, right? So a couple things to think about there. But I think you have an interesting story. Oh gosh, that coffee is cold. You have an interesting story for gold in both scenarios. If inflation stays stubborn, well, here's the thing. If you're somebody who watches gold, which I know is a lot of the audience, I'm actually very curious to see how the gold market reacts here today. I'll say this: if you get hot reads on inflation, historically that's not necessarily good for gold, because then, hey, the Fed's going to probably keep interest rates higher for longer, which is probably still the case. But we've seen cooling in the job market at the same time that we see cooling in the inflation figure. If that happens, gold could be interesting. Anyways, we'll get back to that. We'll take a look at the number as we get closer. Let's just really quick update on the gold market here this morning. It is pulling back, though this is hardly a pullback in consideration of how far this thing has gone. I do have a stop loss in place. I'm long gold. I've been in this trade for some time now, since the end of February. I went long gold. It went sideways on me for a little while, and then we really went off to the races. I have trailed stops on this one several times, and I now have a nice runner on my hands. However, today might be the day, or could not be the day, that I'm out of this trade. Let me explain what I mean by that. If today we see a CPI number that comes out and gold reacts bearishly, I'd stay in the trade if we can hold support. However, let me zoom in. I think I need to refresh my trading view. It's really slow right now. Let me just do this. I'm just gonna close out, reopen it. Sometimes trading view just slows down immensely for me. I don't know if that happens to you guys. It's probably, usually it happens when I'm streaming, just because, of course, I'm doing a lot of stuff with my computer at once. But yeah, so here's the thought process for me on gold and silver, for that matter. I have long positions on both of them. As we go into this number here today, if we get something that really spooks the gold market, which, arguably still could be, hot inflation numbers, probably going to be bearish for gold. Why? Because the Fed will keep rates higher for longer. Not so great for the gold story, which has been, hey, they're going to cut rates. The economy's slowing down. They're going to cut rates, right? And that's been bullish for gold. So keep an eye on that. But what if you get kind of hot inflation, but then gold just bounces? I'm staying long. Here's the thing. If you have the economy slowing and the inflation number stays kind of steady, that actually can be very bullish for gold. If the economy continues to slow and the Fed is still like, hey, we still got a rate cut, that is the super bullish scenario for gold that could enter into some sort of bigger kind of super cycle for metals, which I think is possible. So I'm staying closely watching this today. Gold will be a very interesting one to watch, to say the least. The S&P 500 bounced off of support. We'll see how this one plays out today. I did a poll on my Instagram. You guys said that gold is probably, at least on the poll, it was like 60-40 for gold. People said 60% of the 60% of people said gold is going higher, and about 60%, when I asked the same thing, said the S&P 500 is going lower. So I'm curious to see if you guys are right about that here today. Let's do a quick check on the inflation overall. Here's the story for some of our major economies. We have the UK in dark green, Europe in light kind of olive green, and the US in light blue. So check this out, guys. Today we're going to get the latest print on inflation. Inflation has been coming down for all three major economies. However, what we see here is, if you're a currency trader, remember that if the US inflation starts to meaningfully come down, while Europe's inflation or the UK's inflation stays steady, that's a scenario in which you probably want to be more short the dollar, long those other currencies, rather than something else, right? Because if you're seeing inflation cooling, what that's going to mean is that the Fed, right, if blue, the US inflation continues to tick lower, that could be a scenario in which case the dollar starts to be looking a little bit more weak. Also, that would be bullish for gold. So we'll see. That's why this number matters so much here today. And in terms of top setups here going into this, let's take a quick look. We only have a narrow search here. We have euro dollar, we have gold. These are euro CAD, euro Kiwi, pound New Zealand. These are bullish signals that we've been getting on the EDGEFINDER, and some of them have been very, very profitable. We've been long gold here recently, and that's been awesome. So staying long gold, unless we're tactically long gold, right? What I mean by tactically is I am long gold, but I'm not adding a bunch of size to my trade at this time. I have my stop loss trailed. I'll let this winner go if it wants to keep going. Otherwise, we're going to trail out. So in just a second, guys, we're gonna see the news number here, and I just want to remind everybody there's 1,100 people in here. If you could do me a quick favor, hit the thumbs up button on the stream first of all. Second of all, don't go anywhere after the spike. A lot of people just leave right after the spike. The trading activity goes on after the news. Professional traders do not trade spikes. They react to what the number is actually telling them fundamentally about the markets. I'll do my best to break that down for you guys after we get the spike. I've got everything on the screen for you right now, guys. We got S&P, Dow, NASDAQ. We got the dollar index. We got euro, pound, gold up here, oil here. So there's all your markets, guys. We're coming into the CPI number here in just a moment. Let's see what we get here with our CPI number for February. Here it comes. All right, and we're seeing an initial reaction here to the downside in terms of everything except the dollar. That would indicate to me that perhaps we just saw a little bit of a hot print. Let's go take a look and see. By the way, guys, if you have the numbers, feel free to drop them in the chat. Sometimes Forex Factory is a little slower, and actually, I've been advised that I should stop using Forex Factories. It's a lot slower than others. But anyways, there it is, guys, 3.2%. We have a hot print here today. So 3.2% coming in, and core, by the way, core ticking higher as well. And again, you put this alongside, I would actually, so I'm going to throw something out here today. Please do not take this as financial advice. It absolutely is not. Gold might actually be a buy here, in my personal opinion, for my own personal trading. Okay. I'm not telling you to do anything, because you should not do something based on someone's comments on YouTube. You should do your own research. The reason I say that is, again, remember, inflation staying sticky, but economic numbers cooling, that's a scenario where gold actually does very well. So this initial reaction, in my view, could actually be a dip opportunity on gold. We'll see if I'm right about that. I could be dead wrong about that. But again, I'm warning you, do not just do a trade just because somebody on YouTube talked about something. It's a very, very bad approach to markets. I have a whole strategy and 8 years of experience behind me to place the trades that I trade. You should not absolutely copy anyone on social media. But in my view, this could be a dip buying opportunity, in my personal view, on gold. So I remain long, as I said, as long as we hold this level. This inflation print did come out hot, which is threatening a little bit of the bullish thesis here for now. But again, that drop in gold alongside cooling jobs numbers, alongside PMI numbers that have been weak, this is actually going to be an interesting case for gold. Gold is, in terms of the EDGEFINDER scoring, once this updates under the inflation category, I'm very curious to see what it will come out to be, but I believe it will stay. I think it will be actually either -1 or +1. It's not going to be -2 or +2. It's going to be, the algorithm will consider we're in high inflation territory, but it just moved higher. But here's the thing, guys. At the same time, the economic reads have been weak recently, and that is why we're getting a bullish read for gold in this area, right? So keep that in mind. Interest rates also currently moving in a bullish, favorable way for gold, with overall trending lower recently. So, and there it goes, guys. Gold is right back up after we said that. Let's see how other markets are reacting. So there's the S&P 500 doing its thing, right? Dropping in the initial moments and coming right back. This has been the theme for the S&P and the NASDAQ recently. But yeah, I mean, a hot print here and pushed gold down for a moment, but snapped back here this morning. So we stay in the long trade here currently. We'll see how this one plays out. Dollar index snapped up initially and gave it all back. Wow, that's crazy. So just showing how strong this kind of recent downtrend in the dollar has been. You get a hot print and it still doesn't do enough to move the dollar. I should also mention there is something on the horizon for us all to keep an eye on. That is the 10-year bond auction that happens later today. This has been causing a lot of volatility in financial markets recently and has the potential to do so again today. So keep an eye on that. This afternoon. That actually probably will be a big market mover. It has been very much so in recent times, especially if you trade the US dollar, if you trade currency pairs, if you trade bonds. That has been a very big market mover there. So anyways, yeah, we'll keep an eye on everything. We've got indices in the green here this morning. We've got metals slightly lower, yields flat, Bitcoin flat. In terms of currencies, the USD JPY is up here, but then gave it back a little bit. Dollar Swiss, same kind of thing. Here's dollar CAD. The Australian dollar Kiwi dollar, euro dollar, pound dollar. Very interesting to see that here this morning. Kind of trying to trend higher. We'll see where the euro can go from here. I do have a bullish position on the euro. Let me see where it went. My outline was somewhere. There it is. So I do have a bullish position on the euro. I'll stay in my euro long position as long as we can hold this level of structure here. If we break through that though today, if we see some dollar strength come back into the picture, I'll stop out. It's a small position for me on euro. Gold, again, like I said, probably will move the same direction as the euro. If you do see strength come into the dollar, it would push this thing down. Same thing with the euro, etc. So yeah. What do you mean by sticky inflation? Sticky inflation is the idea that it's not moving lower. Remember, I showed you this chart just a moment ago. Sticky inflation would be inflation's not coming down, it's going sideways, right? So what the Fed wants to see in order to cut rates, they've made this very clear many times. They want to see inflation start to move down again in a meaningful way, down towards their target of a 2% inflation read. So today's number pushes back on that narrative again, and it causes, in my view, a case to be made for short-term dollar strength. Does it completely change the picture for the dollar? I don't know. That's one print, right? But 3.1%, I'm sorry, 3.2% puts us actually higher. So this next candle, when it prints here on the EDGEFINDER, once that data updates, will actually look like this, right? So inflation is continuing to move sideways here today. So that's been a tricky battle for the Fed. And so now where do we take that as traders? What do we do with that information? Well, I'll tell you what we do with it. We let the EDGEFINDER's algorithm interpret what that means in combination with everything else. But here's the thing, if you take a look at all the current readings, gold remains bullish overall on the EDGEFINDER's output. Euro Kiwi, Euro CAD, Euro dollar. You've got the Nikkei just floating neutral, the DAX as well. Then you flip things around, you take a look at the bearish side. You do have the Dow actually getting a bearish read, which I thought was really interesting. Let's go take a look at US 30 here today, see how it's reacting. It is kind of trading sideways a little bit. You take a look at the daily chart. It does look, overall it's been trending very well to the upside. But what I'd say is that if you are more on the bearish camp of this is a tough one to sell against. I really very rarely will ever short indices just because of the difficult nature of doing so. They slowly climb higher and they rapidly fall. If you don't have the perfect timing on trying to sell them, they can be very, very difficult to sell. Anyways, what I'd say you'd look for if you were bearish would be a failure here today, and then looking for that opportunity. But the Dow should be interesting to see how that plays. And Dan in the chat says the Fed will be forced to cut rates at some point. Yes, that is true. And if you do see the economy reads continue to slide, that's where things are going to get interesting. So if you get, and we've seen that, right? We've seen lots of different economic figures come out weak from the United States. And, whether it be PMI data, et cetera, PMI data, we had services PMI, which came out disappointing. So you kind of look at the full picture. We had retail sales that slid. If you get continuation of that theme of, well, the economy is starting to cool, the Fed may be forced to cut rates, especially if one of the lead, most important indicators here, the dual mandate component of the Fed, which is not just inflation. We always hear inflation, but remember, it's also unemployment, right? So if unemployment rises, if we see unemployment, which it did in the recent filing, if that continues to be problematic and perhaps poke into the fours, that's where I think you start getting the Fed's attention on the other side of the mandate. Yes, you have, we need to get inflation down, but you also have, we need to keep people employed at max potential. If you get a slide on the other side of things, that's also where you can see rate cuts. And that will be a very interesting thing to watch play out, because in that scenario, gold could actually really run hot. If you see threats to an unemployment scenario amidst sticky inflation, that is again kind of a gold super cycle scenario. It's why I continue to stay long gold tactically. If we do, by the way, if this is actually going to just run again, if we're going to push higher on gold here this morning, I'll probably trail my stop behind here, just tighten it up a little bit. This thing has run its I don't want to say it's run its course because it could continue to run very hard. In fact, look at that. Gold is now green on the 4-hour candle after that big drop off initially. So again, tactically bullish, staying in this one. Oil here, I'm no longer in oil. It went too choppy for me and I closed out here. I made some money, but admittedly a lot less than what my full trade was. At one point, this was like a $10,000 trade for me. I ended up closing like 3.5. So it was a lot less than what I had at max kind of size. But here's the thing, when the market goes choppy on me like this, I'll just wait for it to kind of make a decision. If we see oil poke back like this, if we start to see it rip again, maybe I'll get back on the long side. But for now, just going to go silent on that one. Silver, there we go. Beautiful movement on silver. In fact, I think silver, if you're newer to markets, you may not recall that historically when there's a real metal market run, the place to be is actually silver. Silver actually outperforms, historically speaking, during good runs in the metals market. If you look at metal market bull runs, silver does tremendously well. So I'm long silver. I think that I might actually need to trail a stop here on silver. For those of you who are in the VIP room, I'll probably trail a stop behind here for silver after seeing this nice rejection. We could actually go ahead and mark this area here. So we've got a nice little rejection off of this. And this is boding well for both gold and silver here this morning. So I'll probably trail my stop there in just a minute. For those of you who are in the VIP room, look at that. Gold is not quitting here today. And the stock market isn't either. There it goes, up 0.5% for the S&P and up 0.6162% for the NASDAQ. The S&P 500 is charging its way yet again back to its all-time highs. We'll see what happens on that front. Dollar index giving back all of its gains and now going negative. Kind of a weird reaction, to be honest. Again, CPI ticked higher on the year over year 3.2% reading. So you have to be careful. You have to be very, very careful on that stuff. Don't listen to Nick. He's a clown. You totally got me, man. Hey, here's the thing. You shouldn't listen to anyone on social media blindly. Not me, not anybody. But I would highly encourage you that if you're going to listen to anyone, you should absolutely listen to somebody who shows their real live trading performance. Here you go. This is my brokerage account. I'm logged into Webull. Let me just show you something. This is my all-time performance on this particular account. I've recorded it publicly for everyone to see. Why am I showing you this? Is it to brag? Kind of, but not really. The point of me showing you this is to show you some legitimacy. This is a live US regulated brokerage that I trade on. And when you watch somebody on YouTube, you should ask for this. You should ask for proof that they do what they say. And I show that proof because, again, I value my audience. I value, I've worked very, very hard to get to the point where you guys are watching me on YouTube, and I'm very thankful that you are. But I didn't get here faking my way. I'm not scamming people. I really do this stuff. I really trade. So with that said, we won't pay any more mind to that again, but you should ask everybody. I appreciate the skepticism of anybody. You should ask for proof. But again, the point of me showing legit, track records is so that we can kind of be on the same page. We're not making noise. We're not wasting time. This is real stuff. Anyways, let's keep going. So let's take a look at this number a little bit again. 3.2% year over year. It is ticking higher from its forecast of 3.1%. And I think we're past the point of just saying inflation is transitory here. I'm sorry, not transitory, but it's just pausing due to the new year. A lot of times people would argue that you're going to get kind of a higher tick up inflation when looking at last year around this time, but we're coming off of that. We had a higher print last year around this time, but we're coming off of that. And that story is kind of running its course. Now we're just seeing continued stubborn inflation. And at the same time, the economy is starting to cool. I really think, and I again, could be wrong about this, but I wouldn't be surprised if we do start to see some rollover in the S&P 500, the NASDAQ, because you are going to get rate cuts. But now it's a question of, are we going to get rate cuts because the economy is slowing? In which case, remember, the economy slowing is just going to be, it's basically going to equate to slowdown in earnings growth for companies. That's what's going to threaten the story for S&P, NASDAQ, et cetera. Especially the NASDAQ. There's a lot of high price to earnings ranked companies here. And so if the economy slows down, then all of a sudden these very high earnings multiples get called into question for companies, like AMD, et cetera, right? You have a lot of these companies which are very, very beloved by the retail and institutional investors alike. But if those start getting called into question due to the economy slowing down, that's where I think you got to be very careful looking at these indices. They've been on huge hot streaks, and just be careful with that. So in my personal view, I've been saying this, I sound like a broken record, but I've been waiting for a pullback on the indices. He probably blew his account. Maybe he did. We don't want to wish ill will on anybody. And I appreciate the skepticism. I think everybody should be skeptical of people they watch on social media. In fact, I want to thank you for introducing maybe somebody in this audience listen to your hey, well, this, that, and the other. And maybe now they're thinking about other people they watch and saying, hey, do they show any sort of proof that they make money? Do they actually show brokers? It's important that you do. I really, really think it's a very, very important thing to do that to people. Why are you showing your paid EDGEFINDER? How is that fair? Now you got me on the ropes here. Why isn't the EDGEFINDER free? So context wise, I have 10 people on my team. They all have like paid salaries. They have, well, not all of them, but most people. I have 7 people in full-time employment in my office to build the softwares, to maintain the softwares, to design what great tools they are. This is not just me in my closet building these sorts of things. I wish I had that sort of ability, but I don't. The reality is the software is not free because salaries aren't free, first of all. Second of all, it's a remarkable tool, and there's no shame in selling a great product and selling it to people because, again, it's worth a lot of money. And to be honest, if I sell it for, let's say, $900 to somebody, or $1,000 or $1,200, whatever the price may be at the time of a sale, you have to understand the price that we've paid for it is in the hundreds of thousands because of all the time, people, investments that have gone into designing the software. So again, I appreciate the skepticism, but think about that. Dan, you're funny. Yeah. Why would somebody buy it? Many people buy it, and you don't have to. So there you go. We've hopefully kindly responded to the skeptics, but you don't have to buy it. You could watch it on the stream here for free. And many people choose to buy it, support our work, and get a copy for themselves so they can click around it on their own pace and do their own stuff. And other people just watch the videos. Hey, you know what? You can also just enjoy some of the great features totally for free. So there you are, my friend. The VIX is down 5.85% here today. That's actually pretty significant because what you have here is the VIX looked like it was moving up. The VIX looked to me like we were actually going to start to see some volatility come back into the picture. I would have loved that because I've been, again, on the sidelines waiting for pullbacks on the indices for some time. But yeah, very, very much an interesting kind of movement in the VIX. We saw a huge spike up and it's just kind of stayed sideways. I sold calls on FXI yesterday, which is the Chinese stock market. I bet you that's doing, actually, I don't know. I haven't looked. Let's see how the FXI is moving today. Oh, that is looking good today. We can definitely say we might have sold calls a little too close because look at this. So yesterday we sold calls. Obviously, the price has jumped up, so my calls are worth a lot less. But remember, I own shares down here. So my shares are up in value here today, and I'd actually love to see this thing just rip higher, call me away for my shares for max profit. I've calculated it out. If I get hit across this line and we take profits, that's going to be a roughly $7,000 trade, which is pretty substantial. Just how volatility is, or how volatile this asset really is. I bought shares around 21.90. So actually, this is, hold on, my entry price is 21.90. I don't know why my price was all the way up there, but 21.90 is my entry price approximately on average for my FXI position. Again, that's a Chinese stock market, and it seems to be actually performing quite well. From its lows here, guys, we are looking at a move up of 19%. I didn't catch the lows, and the market moved against me before it came back. But yeah, that's looking okay. And I sold calls against my position at a strike price of 25. So we have some time until expiration. But if markets kind of, end up above there, then I'll get called away from my position and take profits on it. Not bad. Supreme CT says, Nick, you're selling the EDGEFINDER, and if used correctly, could a person 10x more than they spent on it. Do you know something really cool? I don't know if he's here today, but one of our members in the Discord, I don't want to show, I don't know if it's appropriate to show his picture, but he said something that absolutely made our entire day at the office. So if you're wondering if the EDGEFINDER is worth any money, if it's worth getting, we had somebody, his name's JD. He's in the stream often. I don't know if he's here today or not. He recently got married, and shout out to JD. That's huge. Congratulations. His wedding pictures were beautiful. He sent a picture to me and my team. And he said, and I'm reading it off screen here. He said, hey, Nick, just want to make sure this, and just wanted to share this and say thank you to everyone at A1 for helping me take my trading to a whole new level and helping me pay for just the perfect wedding. Now, we didn't pay him anything. We didn't give him any money. We sold him the copy of the EDGEFINDER. We brought him into our Discord channel. He's been watching the streams every day. So again, I'm gonna hide this because I don't want to show the picture. Just because I don't want to invade anybody's privacy. But I'm not making this up. And this was just the coolest message for our team to get. I shared that with my team internally, and that absolutely made our day. So we do help traders, but we don't do the work for you, and we don't promise to do it either, right? Trading is really hard. This stuff is incredibly difficult, but with the right tools, with the right education, with the right approach, you absolutely can make a significant difference in your financial journey. It is hard work, really hard work, but it's possible. Never be ashamed to make money. Appreciate you guys. Thank you guys. Trader Nick is the only YouTube trader I watch. Thanks, Tim. Tim, you've been here for a while, my friend. I appreciate your long-term viewership, and I know a lot of you guys watch, whether you comment frequently or not. I am very aware that a lot of you guys spend a lot of time watching. I have YouTubers that I watch closely, that I really look up to, and I want to just say, if you're somebody who looks up to my streams, or you look up to me and the gang here at A1, I just want to say we recognize you, and we very much appreciate you watching. I know, again, whether I have addressed you before or not, I just want to let you know that I know you're there, and I appreciate you watching me sincerely. I really do. So with that said, let's keep going. Gold spiked off of its lows. I think it might be time to trail a stop here again, guys. And this gold movement, I've been really this has been a challenging one for me. Obviously, I'm making money, so I'm not complaining at all. What I'm saying is that it's been hard to trail stops because the pullbacks have been so brief. The story for gold bullishness has been so convincing. And I think that we may actually have, like I said, the slight formations of the possibility of a stagflation type environment. I'm not saying it's the end of the world, but we're seeing jobs. Let's go back to our chart that we did earlier. Jobs and CPI. Okay. We have exactly what we've been talking about. We had CPI staying hot and jobs coming down. Do you know what that tells me? I've been saying it on stream and on my videos over and over and over. This tells me to stay bullish gold. What I find so fascinating about this, guys, is that here we are, we're reacting to the news, and this is not even conspiratorial. This is not even guesswork. Big money. Oh, don't tell me we're having maintenance issues on CPI day. We might be working on stuff behind the scenes. Let's see. Sometimes it just needs a fresh reload. Let's see. Come on. Maybe we have COT data. Maybe we don't. If we do not, it is because it is probably being worked on. My point that I was going to say, and I hope that we can show it, is that before all this run-up started to happen, institutional money, and I've made this point many times, institutional money has been getting long. Okay, there it is. We got it, guys. We got days saved. We have COT data. Gold has been massively accumulated by institutional money. And I'm not guessworking. I'm not conspiratorial at all. This is literally from the Commitment of Traders data that's from the CFTC. The CFTC shows that institutional money, this is like hedge funds and banks and money managers, speculators, large speculators in the market. That's what the category is. Large speculators are long gold at a rapid pace. Okay. Not only that, but in the recent weeks, in the recent filings, look at this. They added more. So it's so peculiar to me that prior to this run up, institutional money was building a long position. And we saw it in the data. We talked about it frequently on stream, on videos. This data just kept coming out and it showed, institutional positioning was bullish gold. And I've showed this chart. I showed this chart yesterday, but in case you missed it yesterday, let me show you this. Look at this chart. Ready? Ready for a mind-blowing thing, guys? Look at this. Blue, net COT. Red, net retail positioning. First of all, let's talk about retail. This is pretty obvious. The white line represents the price of gold. Okay, we have a daily, a script that basically just pulls the price of gold each day. Look at this. As gold has run up hard, what have retail traders been doing? Selling. They really started selling from this point on. Okay, February 20th, they sold. Look at this. I mean, this is crazy stuff. They sold. Obviously, retail traders are getting smoked here, right? But what did institutional money do? Let's look at the blue line. Blue money is the Commitment of Traders data for institutional money, right? They bought all through this consolidation. They built a position. This is crazy. Then the market runs up and they're all long. They're all in there and they're in a long position. This is time and time again, something that can be traded, something that can be observed, something that you and I can see. And I want to say something. I've been doing these streams since 2018, 2019. Okay. I started live streaming news events while I was trading all the way back then. I have seen this pattern for years now, several years now. It happens day in, day out. Retail traders all go short. Institutional money was piled into a position and they cash out and they make big money. This is something that we trade frequently. This is why, not just to brag, because I do not get it right all the time, but this is part of the reason, a heavy reason why I went long gold myself. Okay. The theory here is that we watch what the large speculators that are way more informed, way more professional are generally doing. And we consider that they went long before the run up. We could see it in the data that we track. Okay. And then boom, huge explosion to the upside. It's so fascinating that it also happens that retail traders are getting short and they're holding the bag trying to sell gold. Okay. So this is something to think about. I want to also mention here that if you are thinking about getting a copy, today is the last day to get access to the EDGEFINDER for 25% off. I'm going to have my lovely stream master Chandler here drop a link to speak to someone on my team. If you're looking to get a copy of the EDGEFINDER, we're dropping a link here now. So it's in the chat if you're watching with me live. And if you're watching this back at a later time, there will be a link down below in the description, should be the very first one, that will connect you directly to someone, a real person on my staff. So I mentioned earlier, we have a staff of people behind the design, the development, the training, the facilitating of this software. If you've seen enough and you're like, okay, I need that tool, this is a sales pitch. Full stop. I want to just admit transparently, I'm offering you something that you can purchase from my company. But is there value? Absolutely. I showed earlier, literally somebody who sent me a message that said that with their trading going from beginner to pro now. They've been able to help pay for their wedding. I mean, that is one of the coolest testimonials that I've ever seen. And it's somebody who watches the stream every day. He's not, I don't think he's here. He would have said something. But again, if you are thinking about getting a copy of the Edge Finder, the 25% off sale is ending today. Full transparency, that is a sales pitch to you. It is a great offer though, and it is a wonderful product that a lot of great people put a lot of time and a lot of great mind power into building. So take advantage, shoot us a message if you've been thinking about it, and you can get a copy of the tool yourself. I want to check the retail positioning as a whole really quick, see if there's anything else on our heat map here. Indices, retail traders are pretty short biased on. That kind of keeps me on the sidelines. That's why I'm not shorting them myself. But check out the euro. I'm long euro dollar with a small size, partially because we have the euro dollar. We have retail traders kind of shorting this one as well. So that's part of the reason why when we look at euro dollar, I've got a long position, although very small. I'll stay in this trade unless we stop out. So we'll see where the euro can go. If dollar weakness does kind of come back into the picture, that could be interesting. But today, I imagine there might be a pause on that. With this CPI print coming out hot, the dollar index is slightly up on the day. Indices, still up on the day. I mean, this just shows the great resiliency of the indices right now. And I say that with as much honor as I can bestow upon the indices, when in reality, I'm just masking my frustration with them. I felt like that should have been written down. I didn't mean to get that soliloquy on you guys, but basically, long story short, I'm pissed off that I've missed the indices rally recently. There you go. That's another way of saying it. But the indices have been just going straight up, and I've been looking for an opportunity to get long, but I'm really not in a hurry because the long that I'm looking for is not, up here. It really is not. And I am bullish on indices this year. There's several factors in my view to be, several reasons to be long on the indices. It's an election year. Rate cuts are probably coming. As long as the economy doesn't fall apart, I think you've got a story here that could continue to be very bullish for indices. So yeah. So it's something to think about, right? So we're looking for a pullback here. At least that's what I'm looking for. And we'll see if we can get it. In the meantime, I continue to stay long gold, which is coming down a little bit more now. Here we go. If we do get stopped out, we get stopped out. To be honest, I actually wouldn't mind it because I think gold could use a little bit of a breather. And if it happens, it happens. So what I'm looking for in terms of taking profits would be a failure at support. And I mentioned this because we very well could see, guys, gold come down to this area, scoop the lows and keep going. If we get stopped out, I'm personally going to just be looking for pullbacks from there because I still like the story long for gold very much. So yeah. This is absolutely not true. It's full of malware. I just bought it. If you think it's malware, okay. 1-2, I might need to block you, man. Don't make me. I don't like to silence people, and if I have to do it, I will. So chill out for me. There's no malware in the software. It's built on Google's platform. So if you're accusing us of malware or something like that, just note you're also accusing Google of allowing that to happen on their platform. So it's you versus Google, and not just you versus us, because the software is built all within the Google suite. And so, yeah, but chill out on that. Otherwise, I will have to block you. I'm going to have to, man. I just, okay, everybody's saying block them. 1-2, signing out, man. I appreciate your skepticism, but there's a point where skepticism just blinds you, and you're gone, my friend. I'm sorry. He's gone, guys. The people have spoken. The council has spoken. Yep, he's gone. Honestly, I don't know, guys. 1-2, I kind of miss him already. He just gambled on CPI, poor guy. Who knows? You never know. Again, I like to give people the benefit of the doubt, but there's a point where, come on. It's not every once in a while, guys, on the social media side, and I'm sure anybody in the audience who like Dan or anybody else who has a following knows this. Sometimes you have people that they just no answer is good for them ever, right? They will never be proved. You are a fraud in their eyes. You are a waste of space, a waste of time, and they're angry at everybody on social media, and nobody's comment, nobody's rational response, nobody's kindness, nobody's anything is good enough. They're just going to stay bitter, stay mad, and if you block them, they're on to the next comment section, right? It's like the keyboard warriors will be, if they run out of keyboard space on one place, they're on to the next. Guys, we might get trailed out of gold. Well, we'll see. Again, test. We're coming into test mode here for gold. If gold breaks this level today, that's going to be it. That's going to be my stop is hit, trailed, and we are on the sidelines again for gold. But if we bounce, we bounce. Could you look at NASDAQ? Sure, I can look at the NASDAQ. Absolutely. So let's look at the NASDAQ. The NASDAQ here on a 4-hour chart is kind of ranging. And noticeably, the S&P 500's bounce has been a lot more resilient here recently than the NASDAQ's. If you get a scenario in which case, Chance Online, by the way, thank you very much for the donation. I very much appreciate that. Don't donate to the stream well, I appreciate it. First of all, thank you very much. You don't have to do that though. If you've ever thought about supporting our work here, if you like the shows, consider getting yourself a membership within the group for a month, whatever. Come join us, come hang out with us. That way you get something out of it too. Other than I just appreciate you supporting. Chance says, Nick, what happened to my suggestion on the EDGEFINDER of trying to provide the valuation compared to yields? Valuation compared to yields. Valuation compared to yields. I'm not actually sure, Chance. I'm not sure that I follow your question there. If you write it a different way, I might understand you a little bit better. But valuation, if you're talking about like stocks or bonds, I can't tell what valuation sort of thing you're talking about. Joseph says, love you, bro. Taught me so much. I've asked many questions in Discord. Hey, what's up, Eliminate? Thanks for showing up. How come you went long euro dollar? Yeah, let's talk about that. There's a couple reasons. So should still be, let's see. Yep, euro USD. So this is the reason, right? Keeping it simple here. Let's walk through the bullish. Actually, we have a page for this. Let's pull up the scanner. If you're somebody like, for example, that you really trade gold or you really trade silver. Actually, we don't have silver just yet. We're working on that. Let's say you trade the euro, right? That's what we're looking at currently. If we're looking at the euro, also, let me finish my thoughts on NASDAQ. NASDAQ, we're range bound. I'd really like to see a breakout, to be honest, to the downside. But if we don't, then it's just continued bullishness. I don't have a position on personally. I've made it clear for me. I'm looking for a 5% pullback in the indices. If we can get that, I'd be really interested in getting long. But I really would like to see that. We have not had a 5% correction in several months on the S&P 500. I think the NASDAQ has, which it's more volatile, so it would make sense. But the S&P 500 hasn't had a 5% correction in a very long time. And so I'm waiting for that. I think we need to kind of rebalance a little bit with indices and see some healthy pessimism, some healthy bearishness. Remember, I responded to the pessimism and the skepticism in the audience. I appreciate a level of that. I'm kind of a skeptic myself in many ways when I'm watching social media and stuff. So I recognize and appreciate that there's a healthy level of concern of like, hey, is this person really making money? So on and so forth. It's really important that somebody shows their proof. But there is a point where skepticism and frustration like that can be blinding. So for me, I would like to see the S&P, the NASDAQ, et cetera, pull back healthily, but we're not quite there, I would say. So let's look at some stuff here for the euro. In terms of the more simple stuff, retail traders are more short than they are long. That generally is going to be more of a bullish factor for the euro. And I'm not sure what's taking this page so long. So let's just do it off the top setups. So the euro is getting a score of +6. The commitment of traders data leans more towards the euro over the dollar. Retail positioning, I don't know why it's saying 0. It probably just hasn't updated yet, but it should be in the positive territory. If the euro continues to trend higher, that shows that retail traders are more likely to be short. They usually trend, they usually fade trends, and that's why they get themselves into a lot of trouble usually. But anyways, seasonality is not going in our favor the month of March, not particularly bullish for the euro against the dollar. The trend currently, however, is positive to the upside. The economic reads right now are favoring Europe over the dollar in recent numbers. Labor market has been really cooling in the U.S. That's going to be more of a bearish thing for the dollar relative to the euro. Inflation is moving basically when comparing the two. We could take a look at inflation, by the way. Let's pull that up. Inflation here. So inflation data, when we cross the two of them, so inflation hasn't updated yet, but it actually will be really interesting in just a moment when this does update on the EDGEFINDER, when we can compare the inflation read from the US. It is going to actually favor the US dollar in this scenario, because what's going to happen is this inflation data is coming in like this, okay? It's coming up to 3.2. When that data updates and we get a view of the euro versus the dollar, that is actually going to give more of a favoritism toward the US dollar, because again, in this case, you have inflation cooling in Europe, inflation staying stubborn in the US. So in that category, it doesn't bode well for my position. But again, remember, this is why when we talk about the EDGEFINDER, we look at it as kind of a full picture. We look at lots of different factors all at once. While one category might not serve your narrative of bullishness, right? If the majority of the other ones do, that's more important. That's the way the EDGEFINDER's calculations work, right? Each category shifts things one way or the other, and we tally up the total, get a bullish read. Valuation of a currency, powerful tool. You're talking about crossing the two interest rates. I think I saw your comment come across our screens. But yeah, we do have a chance in the future here, plans to kind of strip out and upgrade our calculations of interest rates. So we definitely have your point taken. It's in our brainstorming. It takes us a long time to get to stuff, to be honest, because of the fact that development is much slower than idea of brainstorming. But your idea was added to our list of things to look at. Gold is buying, but you missed a good discount. Is gold pushing back up? Let's go take a look. Look at that. NASDAQ coming down now. S&P almost flat on the day. This is just, here's a testament of how strong the indices are right now. You had a hot print on CPI, cool jobs data, and the stock market is unmoved. Crazy. Crazy as in just impressive. The indices just don't want to sell, it seems like. We'll see what happens, though. I think that narrative could change, and we could see a shift in that. Quick look at Bitcoin. We're at 72,200. By the way, Chance, thank you again for the donations. I appreciate that, man. So let's keep going in terms of Bitcoin. When we are looking at Bitcoin, 72,200. Part of the reason that it's trending higher is alongside gold trending higher. At least what we've been talking about here recently on the stream. Frank's made this point a couple of times, and we'll talk to him, I'm sure, about this again in a moment. Gold and Bitcoin and silver have kind of been moving in a generally similar direction. And the idea that we've been playing around with is this idea that maybe they're doing so because there's this movement away from the US dollar. And perhaps we could see a bit of give back in that narrative today with the hot inflation read. The dollar is moving higher today. So I don't know, kind of an interesting story. Where am I with the dollar? The dollar index in terms of price action wise was trending well to the upside, kind of fell apart, has been putting in a lower high here. In fact, we can actually get our trend line here, just draw a simple trend line to the downside. Momentum has definitely shifted back in favor of the bears, but I'm curious to see how we react to this area, or if we break through that area, are we going to react more strongly at this trend line to continue this downtrend? And with CPI and jobs data, here's where I'm at with it. Mixed for the dollar, because you had jobs data come out weak, inflation come out hot. That's kind of mixed for the US dollar right now. Where things are more interesting, though, is that paints pretty much the picture for gold. So it keeps me, in terms of where I'm focused right now, focused on gold. Because again, cooling jobs while sticky inflation is around, that is a scenario where we like gold for the most part. Real quick, I'm gonna take a quick break here. We'll be back in just 30 seconds or so with Frank. We're going to thank our sponsors who make these shows possible, and we'll be right back with Frank to talk a little bit more about this topic.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker Eightcap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to Eightcap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, guys, and we are back. And in just a second, we're going to talk a little bit more about this concept of gold, silver, Bitcoin, and the dollar all in that picture. Before we talk about that, Frank, I just want to drop to the audience here. We are currently, we just talked a little bit about, or we just saw the roll from Eightcap. We're also doing a free competition with Eightcap right now. I just dropped a link there. Click this link if you are not already in the competition. It is 100% free to join. We are giving away 3 different copies of the Edge Finder to people who win this competition. So if you've been thinking about the Edge Finder, been wanting the copy of the Edge Finder, here's your chance to potentially win one for free. Click this link. It should take you to the place where you can sign up totally free for that competition that we're hosting alongside Eightcap. So again, Eightcap sponsoring the stream and also handing out free copies of the Edge Finder. So shout out to them. Hey, Frank, how's it going?
Pretty good. How are you?
Pretty good, man. Hey, so jobs data cool, CPI hot. Is that not the gold kind of bullish environment we've been looking for?
Yeah, this kind of data was what I was looking for gold, and I'm honestly glad it's pulling back because now I want an opportunity to get in.
Yeah.
Just seeing today's CPI core came in higher, and then was it year over year was higher too. I think it was higher all around.
Yeah.
But it was as expected on a monthly basis. But seeing core come in higher than expected, it's still at the same level it was last month. Just shows the stubborn inflation levels, and then the other CPIs coming in higher, which is also good for gold, I would say. This is kind of what I was hoping for, and it kind of makes sense. It brings, I guess, validity to gold's rally in the past week or so. Just seeing increased demand on metals and Bitcoin, keeping the dollar weak, and indices. That's a whole other topic, but I think this is not a good sign for the indices. They might, the initial reaction might have been, okay, higher inflation's levels, so maybe we'll get a rate cut. That might be perceived as bullish, but we talked about this last week, in that higher inflation levels doesn't necessarily mean bullishness in the indices. Doesn't mean a rate cut is a good thing in this scenario. So I think this might be, the Fed might have to cut rates because they have to, and not because of the luxury of seeing lower inflation levels.
I think you broke that down really well. And I think that it is possible that the indices are, I was talking about this earlier. They just seem indestructible right now until at some point they won't be. And that moment when the narrative changes, the sell-off will be quick, and it always is. It's always, when the narrative shifts, it shifts hard and fast. And I kind of agree, with the inflationary number coming in, we are just not seeing what the Fed has talked about with their, and we've gone over this many times. I was talking about this earlier, Frank. If you take a look at the inflation just for the US, right? Inflation came down quickly, and then it sort of has tapered off, and we haven't seen that trend lower towards that 2% target that we've seen the Fed talking about. Well, not only that, not only are we not trending down, we just ticked higher. We went up to 3.2% now. And so, that number is not anywhere near right now, at least, trending lower, right? You probably, if you were looking for a soft inflation read here today, that might have given you context to say, hey, look, we're back towards inflation, and you probably see the stock market rally. But what is kind of frustrating to me is that, okay, that narrative got taken away, and yet the S&P 500 isn't even red on the day. It's crazy. It's just the bulls are so resilient. What do you think? Is there something that cracks this, or is it just, do you think, a delayed reaction? We could see a sell-off today. What do you think?
I think we just have to wait to see what happens today.
Yeah.
The reaction wasn't necessarily hard in either direction. So to me, it looks like the momentum has sort of halted for the time being. But
Yeah.
you're right. The indices have been so resilient, and just pushing past all expectations of what we thought initially, like where it would top out, where every time it has a bearish candle and looks overextended, it might pull back a tiny bit and then break the highs once again. In this case, though, I was waiting on the inflation data because we've been seeing this buildup over time of lower jobs, lower output, lower wage growth, yet rising inflation. The dollar is definitely weak in this scenario, and stocks or I guess just risk assets overall, are not favored in this type of scenario. But um, you know, they they've broken our expectations. The indices have for some time, so
Yep.
we'll see. But in my mind, I think we're just gonna have to wait and see what happens today. I think
Yeah, and I think you broke that down well. And we also had a comment in the audience from Dan. Dan says rates need more time, but will the economy hold up across jobs, GDP, and business? That's the big question. And it is the big question because here we are, Frank. We're saying, okay, well, jobs are kind of starting to slide, and inflation's still sticky, and inflation still could come down at some point, but will it take too long? And interest rates being at these higher levels, will they put stress on the system? And one area that I like to talk about is that if we keep seeing interest rate cut expectations get pushed back, watch the regional banking sector. It's an area that's been more sensitive to higher interest rates, especially since a lot of their books are full of corporate office space debt. And if interest rates stay higher for longer, this area could start to see some more trouble because they rely on, of course, the interest rate levels that are set by the Fed. It impacts the entirety of their business. Higher rates have been a troublesome thing for them in the past, and also have led to a few bank failures. Bank failures are incredibly bullish for gold because people start getting fearful of the financial system. So I think that we keep circling back, Frank, but right now I think the place to stay is looking at gold until we get a more clear picture on the indices, or at least a pullback to watch. So I guess you talked about wanting to potentially get into gold yourself. Where do you see a pullback setup?
I would say where it broke the highs. How long ago was this? Back in December, it touched 2040 something.
Mhm.
We're at 20 or 2140. We're at 2164. It might even be the slight pullback. I may try to test an entry here if it breaks underneath, then probably lower closer to this falling wedge or this
Hmm.
trend line right here. Probably 2070s or 2140s. I'll just keep trying to play it and see what happens with price action. But this one pullback we see today on gold is the first red candle we've seen in several days. So
Yep.
this might be its one and only chance to catch it at a slightly lower level.
Yeah, definitely. It's just been moving with so much momentum, and as you point out, the first red day preceded by 1, 2, 3, 4, 5, 6, 7, 8, 9 green days in a row. Gold has been going up every day for 9 out of the 10 days, past 10 days, so including today. Interesting. We'll see how this candle closes today. See what happens there, and for me personally, as I mentioned earlier, guys. If we break support here, and again, it is a 4-hour support level that I kind of have to grasp at straws here to find support levels to play. But if we break that level, that's going to be out for me. And in terms of reentry, it's so tricky. Like if I wasn't in this position already, I think I think you laid it out well, Frank. One area that is interesting is right around where this current level of support is. There's kind of a buy, like a two-parter here. Yes, there's a little bit of a pause here that rallied off of this level, but 2150, as you pointed out in I think yesterday's stream, is the previous all-time high. So it will be really interesting to see if we scroll out on the daily chart. Again, this is the previous all-time intraday high is right around here. I think that if we get anywhere near that, you probably should see a bounce pretty quickly. And if you do not, again, that's where maybe the next stop is to see a bigger pullback. But again, I think that for a bigger pullback, you need to see something fundamentally shift. And right now, I just see way too many bullish factors fundamentally for gold.
Right. And it may not even test that level. This might be the only dip we see, but we'll have to watch the charts. I also wanted to add that Bitcoin is also on
Yeah.
my watch list too. Um, breaking significant levels, breaking the all-time highs of 2021, coming higher. This thing, I don't know if it's going to pull back or not, but I own a little bit of Bitcoin. I've held it for like a handful of years now. So I'm just going to ride this one out. But in terms of trading, I might look at an ETF and try to catch a swing to the upside. Just because, although I don't agree that the halving is going to do much for Bitcoin and its value, I think the hype around it is probably going to continue. And the stagflation issue is, I think, equally as important for Bitcoin as it is for gold, just because veering away from the dollar and seeing a sentiment shift of potential rate cuts or keeping rates higher for longer, I think either way, it's a bullish case for Bitcoin and gold because overall, it's just going to be a weaker dollar. You're going to see
Yeah.
higher rates for longer, even though inflation is rising. And lower economic output if this trend continues. That's the stagflation issue is a weak dollar issue. So seeing
Yep.
that continue for the next several months is going to be interesting for Bitcoin and gold.
Yep. Yep. Thanks, Frank, for all that. And again, I'll let you go here from there. But I just wanted to reiterate that point that you've made, which I think has been very, very true recently, is there is the case to be made that that weakness in the dollar recently could be causing people, especially with like financial stuff on the watch as well. Dan pointed out in the chat that the bank term funding program is ending soon for a lot of the smaller banks that were kind of using that as stimulus to keep them afloat during the last year or so. That's ending, and so it kind of does call into question maybe that timing is so peculiar. It is at the same time that's ending, you see Bitcoin and gold rallying. It's almost like maybe there's just a little bit of a move out of the dollar and finding other places to park it. Even silver is participating recently. So silver never does anything, and now it's actually making a move. So kind of interesting, all the stuff going on. Frank, thank you very much for coming on the show and for sharing your thoughts. And we'll see you back on the next one.
Thanks for having me.
See you, Frank. Yep. Always good to have Frank's commentary. And again, I think that he's on to something with that thought. You guys know I'm not like a incredible bullish person on Bitcoin. I have some that I've just held for mostly for fun. I don't necessarily am not a huge believer in terms of Bitcoin personally, but the momentum is there, and it's hard to deny that it is selling for all-time highs. One of the most bullish things to me about Bitcoin that I see, scrap everything else, why hasn't it gone to zero, right? It's been around for a long time. It hasn't gone to zero. Now it's at the all-time highs. I don't know, kind of an interesting thing. And while I don't claim to understand it by any means, I do find it impressive that it's done so much in terms of assets. I think it's like the #1 performing asset anywhere in terms of major markets. Anyways, yeah, kind of crazy stuff. So yeah, guys, in terms of top setups here, let me just really quick take out the neutrals. This is what we're looking at right now. We've got bearishness in the Dow, specifically the dollar against the South African rand. We have the euro, the euro CAD, the gold market, euro Kiwi, pound New Zealand. These are your readings currently on the EDGEFINDER. We pull up to the smart money indicator for gold earlier. This was an interesting story. I do want to look at it as we speak here with the euro against the dollar. See what's happening here. The euro dollar has been starting to trend up here recently. Retail traders seem to be more on the sell side, and institutional money has a net bullish position, though it's come down from where it was back in early January. I like to use this tool because what it can do is very quickly cross institutional money positioning versus retail money. And while retail money is not always wrong, it is useful in my view to see when they get kind of polarized in one way extremely well, like, very long or very short, etc. Also, we of course have all the different assets on the screen here. You've got everything from indices, commodities, currency pairs, even some crypto. We have Bitcoin in there as well. If you guys don't have a copy of this software and you'd like to take advantage of our 25% off sale, that is ending here today. Today is the last day to get 25% off the software. If you would like to get a copy, we're going to drop a link here in the chat for you. Click that link. It will take you to a direct message center where you can speak with someone on my staff about getting a copy for that discount before it ends. Let me just show you what that link looks like so you're familiar. When you click that link, it'll take you to a direct message spot. Just hit chat now. Click EDGEFINDER flash sale, which is ending today. Today is the last day. So as we close out the stream, if you've been thinking about it, just chat with someone on our team, get to know somebody from there, ask your questions about the EDGEFINDER. Even if you don't plan on buying it today, feel free to ask a question, figure out if it's the tool right for you. We also offer payment plans if that's something you're worried about. You can break up the cost into a couple payments if that would be easier for you. Someone from my staff will help you out with that. Thank you guys very much for tuning into today's live stream. It was a great one. We had a lot of data that came out here today between CPI and jobs numbers last week. It's been incredibly interesting. And we'll go from there with the next one. Thank you guys very much for tuning in. Have a great rest of your day. Real quick, I wanted to throw a shout out to our stream sponsor here on the A1 Trading Show, Forex VPS. If you haven't heard of Forex VPS before, they are a dedicated hosting platform where traders, especially algorithmic traders, can set up an in-the-cloud computer to run their MT4 24/7. If you have any experience trading with robots on MetaTrader 4 using expert advisors, they have to remain up all the time, and keeping your computer on is not always practical if you have like a power outage or that sort of thing. And with Forex VPS, you can set up a dedicated hosted computer in the cloud to host your MT4 or 5 platform. They have the fastest execution in the industry with latency less than 1 millisecond, which means when you place trades or your system places trades, it's near instant. So I've got my VPS open here from Forex VPS, and you can see, I just want to show how quick the latency is here. So if I click sell, you can see it is right away. I'm in the trade, all set, as if I was sitting on this computer, even though it's somewhere in the cloud. For stream viewers right now, Forex VPS is offering a 7-day free trial and 30% off of your final subscription. If you're interested in giving it a shot, there's no risk. Why not? Use the link down below and the promo code there, A1Trading30, for 30% off. If you're watching this stream at a later time, you can also find it linked in the description below.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.